Good morning, everyone, and welcome to the Ankerstar Wealth Market Update. I'm your host, Allison Ankerstar, and today we'll be talking about the Russia troop pullback from the Ukraine border, the role of Bitcoin in your portfolio, and what is the secret to long-term investing. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer, information is available at ankerstarwealth.com. Good morning, Steve. The news is reporting that Russia has pulled its troops back to their bases. What's your take on this?
Well, good morning, everyone, and thank you for that intro, Allison. I pulled up the chart here. We're, of course, going to relate the news to how it's affecting the market, right? So first of all, whenever you get a news story, you have to take it with a little bit of a grain of salt, right? So you have the Russian troop pullback. Who knows how many, who knows exactly how accurate that is. Who knows for what reason? They could be pulling back for supply chain issues, food issues, fuel issues, all kinds of things. I will say, though, when you look at the entirety of what Putin has done here, he's gotten a lot of advertising value out. He's become relevant again. So no one really knows his true goal. Maybe it was just to posture and become relevant, get part of the conversation again. Or maybe it truly was to invade and he changed his mind, or this is just simply a trick to where he looks like he's not invading and he's going to turn around and invade tomorrow. So we don't really know for sure, but certainly all the signs are pointing to a pullback and a potential de-escalation situation, which of course is what we want as people. And it's what we want as investors, because that's how it affects the market. So I have pulled up a 1-year chart here of the S&P 500, and you can see all the way up and to the right. We had the big sell-off in January, to the tune of 10% or so. Largely that was Fed interest rate hike induced, pricing that in, whether it's three rate hikes, who knows, we shall see. Some of that's being priced in, but also some of that was the Russian-Ukraine situation. And then we had the recovery, and then the last 3 days have all been in the red with some selling there. So with a de-escalation, we got the any day now speech from the National Security Advisor 2 weekends in a row, right? So we have these Mondays that are down because we're getting this any day now, imminent kind of report from overseas in the national security situation over there. So of course, if things kick off, that'd be bad. It wouldn't necessarily crush the market right away, like we've talked about, but certainly it would not be good. And now that we're getting some good news out of that, now you're going to see likely the market recover today. It should hold. We have the futures in the green pretty significantly already, almost up 2%. But when you look at this particular chart, we are kind of primed to bounce after the 3-day down. The indicators down at the bottom indicate that the market is a little oversold. So personally, for the market, and we'll take a look at the futures here just real quick. Here we go. You can see the futures in the green there. Personally, I think that the worst is over in the Russia-Ukraine situation. There's no guarantee of that. I have no crystal ball, but it certainly seems like Vladimir Putin's met his objectives by moving forces down there and becoming relevant again.
Switching to crypto investing, Bitcoin seems to be bouncing back from its recent low. What is the role of Bitcoin in a portfolio?
Well, Bitcoin is unique. First of all, the whole crypto space. If you don't believe, if you think it's a bunch of BS, then don't invest in it, right? You have to believe in your investments. You have to be confident in them. You have to sleep well at night knowing that your money is positioned correctly to make you money over time, because your money is working for you while you are off doing other things. So if you just don't believe the crypto story, don't invest in crypto. So I'm not trying to convince you, but if you do believe in the crypto story and you think that there is a place for / usefulness for cryptocurrencies and that they're here to stay, I think personally, Bitcoin is the best of the cryptocurrencies. You can make an argument from early adopter to the biggest. I don't know if it's necessarily the biggest anymore by market cap, but certainly it's the most mainstream, if you will. You have Bitcoin, you have Ethereum, then you have Ripple and Solana's making a move, and you have a lot of the other coins, the altcoins, if you will, that are posturing. And that lineup changes every day with what's in favor and what's not. But when you look at Bitcoin itself, and you can see the price action here, there's things I like about it. So let's talk about the price action first. So back in October, it was around 40,000. It popped up to around 60,000, which is in here, kind of had that double peak towards the end of the year. Sold off into the end of the year. Everybody was calling the 100,000 by the end of the year. That was a little optimistic, right? So that did not happen. It sold off into the end of the year, and then finished around what, 47 or so, dipped all the way down here to almost 35, and then it's bounced, as you can see. From mid January on, we've seen a bounce in Bitcoin. So, and nice move up today, right? So 5% already today, or almost 5%, that is. So when you look at reasons to invest in Bitcoin and why I like it over the other cryptos, are really three reasons. Is there's a limited supply. So even if you're not super familiar with Bitcoin, there's only so many that are going to be mined. It's all part of the grand algorithm, if you will. It's a halving algorithm, meaning half of each, the total production is reduced by half each year. It's kind of the old math story. You get half, if you can only go halfway to the door, you actually never get to the door, sort of scenario. So they're having that. So there's less produced each year. But I think 21 million is the total number of Bitcoins that will ever be produced. And I like anything with a finite supply. So that's one. Two is people want it, because there's certainly going to be more and more people who wake up every day who believe the Bitcoin story and say, I want in. And three is the people who have it generally aren't selling. So, and you're like, well, you're guessing. And I'm like, to an extent I am, but no matter what the underlying asset is, in that situation, the price is going to move up. What I would relate it to, and this was kind of a weird turn of events, and I think everyone would agree, is the used car market, right? There's only so many out there. People want them / need them. And the people who have them aren't selling. For who cares if I can make 6 or 7 more grand on the car I have, because if I sell it, then I don't have it. So really, that's why I like Bitcoin. What role does it play? It's not a hedging function. It's, some people say long-term store of value. I don't, maybe it is, maybe it isn't. But certainly, and then of course it's getting some popularity, a lot of press out of the trucker situation in Canada, and the government's taking action. And it's like, the people are like, well, if you're in crypto, you don't care what the government does. That's not exactly true, but there's a lot of things out there to like it, but it's not really a hedge. So don't invest it because it's a hedge against the stock market. So overall, I would say, to conclude, if you believe in the crypto story, Bitcoin's a good way to get in. I use a proxy for it. I don't own it directly, but you can certainly own it directly or use a proxy.
Last question. What is the secret to long-term investing?
I get asked that a lot. And generally that question gets asked a lot more when you have a downturn like we've had in January. So I guess to back up some philosophy first. So normally, proper portfolio management, you want a diversified portfolio. And by a diversified portfolio, and it doesn't matter the term of the investing, you just want a diversified portfolio in the fact that, by definition, every day, if things go up, something else is going down. That's diversified. If it's, if everything goes up or everything goes down, that's not diversified. Well, you can diversify all you want, but what we've seen lately that we did not see in the past couple of decades, which is kind of a game changer, is that March 2020, obviously with the pandemic, it was everything sold off. It did not matter if you were in the safest of safe bonds, gold. Nothing went up. Everything was people were logging in the morning and selling what they had. Well, that leads to a situation to where diversification doesn't give you the same protection that it always has. And I was having having to have conversations with clients about, hey, I thought my bonds were safe. And it's just like, well, this time it's different. And that you really look stupid as an advisor, but you just have to report the facts. And it's just like, well, everything is selling off and there is nothing safe right now. We saw that in January too. So the reason I bring it up is we saw it in March 2020, where I was talking about it quite a bit. And then in January, we saw the same sort of thing. So there really wasn't that safe area. It was, look, you couldn't find that, well, I'll just rotate out of X to go into Y because it's on the way up while X is on the way down. And it's like there wasn't that place. The bond funds that are supposed to be rock solid have all leaked kind of continually, so that, hey, let's go into treasuries because they're rock solid, and they pay 2% tax free. Municipal bonds, excuse me, I said treasuries, municipal bonds. It's still paying 2% tax free, except for the overall price of the bond fund has leaked, and that was unexpected. And it's because it's a sell everything type of January and on into February because of interest rates and, of course, the geopolitical stuff and the Fed and all the above, right? So when you think long-term investing, though, you want that diversified portfolio, unless you're trying to focus for outperformance. Then you would want to focus your portfolio. But either way, you do have to give things time. And I will answer this with, I had a good conversation come in through email, more an email conversation about, how much time do I give this, right? And it was a great question. It was tough to answer. I've been trying to answer with over email, but there's just no way to really cover it all without talking. But I will say, when you look historically, and I would say recent history, I'll give you that, 98 on, we had the crash in 2000, and it took a couple years to recover. Right, that was the big tech crash. We floated on in. Things went up into the global financial crisis, where the market dropped 53% from peak to trough in about a little over 18 months. So that's what you saw here. And then, of course, to actually recover back to where you were, now you're talking that spread of 2 to 3 years by the time you get back to where you were. So the pain can last generally for a year and a half to 2 years, and then the recovery can just kind of double that. We've seen a lot more snapback recently, though, from the big sell-offs. We had the Fed-induced sell-off here in December 2018, where the market sold off 19% a month from raising rates. So are we ready to do that again? Well, I think this time the market's gotten in front of the rate hike. It's already priced it in basically off the news, because 2018 is pretty recent memory. Even the newest folks in the industry remember that, right? It wasn't that long ago. So but you're seeing a lot of a faster snapback now. A couple things are making the market resilient is, and why I think the bottom's in here, I don't think it's going to continue to sell off, is two reasons. First of all, cash is challenged right now because, before it was low interest. You couldn't make any money out of money in the bank. You're like, well, I'm not losing any money either. I'm like, okay, I just can't argue that till, forever. But when you're a long-term investor, you're going to make money over time. You're going to make a lot of money over time. But it certainly can look bad in the short term. But, money in the bank has been challenged from it won't make any money. And now money in the bank is challenged because of inflation. So you're losing producing power. So really it's that search for money out of the bank and where does it plug into the market. That's why I think we'll see a significant snapback out of what we're seeing here. That's one, is money in the bank works against you. And then two, when you think about all of the 401ks and thrift saving plans, 457s, 403bs, all of this stuff is coming out. That's money into the market. So really every time the market sells off, stocks are getting cheaper, bonds are getting cheaper, people are buying that stuff, and that helps the market go higher. So, I'd say to answer long-term investing, probably 3 years. Kind of want to stick to your plan for 3 years, help everything recover. You don't want to chase through these peaks and valleys, though. That's the trying to time the market. You don't want to do that. You want to look for opportunities, but you don't want to be a true market timer, because you'll generally get it backwards and cost yourself a bunch of money. So to conclude, everybody's long-term is different. You have to do what's best for you and your family. But I think 3 years is probably that good answer to kind of stick with your game plan, at least for what you're doing.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.